In Chapter 11, we'll be accounting for purchases transactions using a general journal. Explain the purpose of a general journal, account for purchases, returns, and allowances, post a general journal to the accounts payable ledger and general ledger. General journal is a journal with two amount columns in which all kinds of entries can be recorded is called a general journal. Not every transaction can be recorded in a special journal, so those that don't go in special journals will go in the general journal. One example of that is a memorandum for buying supplies on account. December 2nd, bought store supplies on account from SD Supply, 165.25, memorandum number 42. Supplies store is an increase. Accounts payable is also an increase with a credit. And this is what it should look like on your general journal. Put the date, the account title, supplies store, memorandum numbers M42, the debit amount 165.25. The account title and vendor name is indented on the second line. Put a diagonal line in the post-reference column because both accounts payable and SD Supply has to be posted. And then the credit amount 165.25. Debit memorandum for purchases, returns, and allowance. Credit allowed for the purchase price of returned merchandise, resulting in a decrease in the customer's account payable to the vendor, is called a purchases return. Credit allowed for part of the purchase price of merchandise that is not returned, resulting in a decrease in the customer's account payable to the vendor, is called a purchases allowance. A form prepared by the customer showing the price deduction taken by the customer for a return or an allowance is called a debit memorandum. This is what one looks like. We have the name of the company and how much is being returned to them. Journalizing purchases, returns, and allowances. December 8th, returned merchandise to Mobley Tools, 4390, covering purchase invoice number 528, debit memorandum number 38. Accounts payable is decreased. Purchases, returns, and allowances is increased. You would put the date. The debit is accounts payable / Mobley Supplies. DM for debit memorandum 38. You would put a diagonal line in the post-reference column. Debit amount 4390. Purchases, returns, and allowances is indented on the second line of the transaction. And then the credit amount is 4390. Posting from a general journal to an accounts payable ledger. So first we're going to post to SD Supplies and Mobley Tools. You put the date, the journal page number. This is the general journal, so it's going to be G12. And it's a credit of 165.25 for SDs and 4390 for Mobley Tools. So in the instance of SD Supply, we have a credit balance with a credit. You would add those together, and then you have your new balance, and then you would take the vendor number 220 and put it on the right side of the diagonal line. For Mobley Tools, that one is a debit, so we have a credit balance and a debit. That would mean we would subtract, and then we would put our vendor number on the general journal. Posting from a general journal to a general ledger. So here we are going to post to the accounts. So we have supplies store, we put our date, our journal page number is G12, we have a debit of $165.25 for supplies store, we have a debit and a debit, we're going to add those together, and then we take our account number and put it in the post reference column on the general journal. For accounts payable is a credit. So we have a credit and a credit. We're going to add them. And then we take the account number 2110 and put it in the post reference column of the general journal. When is transaction recorded in a general journal? When the transaction cannot be recorded in a special journal. When is the equality of debits and credits proved for a general journal? After each general journal entry is recorded. What is a primary difference between a purchases return and a purchases allowance? A purchases return is credit allowed for the purchase price of returned merchandise. A purchases allowance is credit allowed for part of the purchase price of merchandise that is not returned, such as for units that are damaged but still usable or of a different quality than that ordered. If purchases, returns, and allowances decrease the value of purchases, why are returns and allowances credited to a separate account? Better information is provided if purchases, returns, and allowances are credited to a separate account. A business can then track the amount of purchases, returns, and allowances in a fiscal period to evaluate the efficiency of its purchasing activities.